Welcome to this session, this webinar, and what we're going to be covering is how to price your bookkeeping services in 2022. We're going to look at the pricing mistakes that you can avoid. We're going to look at some of the foundations of value pricing, the foundations of pricing bookkeeping services so that you make more profit and have more fun in your business. Now, I hope you're having an amazing time so far at the Successful Bookkeeper Summit 2021. I know it's going to be awesome, and in this particular session we're going to be looking at some of the most important skills you need to learn, which is pricing. How do we price our services? How do we price bookkeeping services? Now, if you don't know who I am, a quick background: my name is Mark Wickersham. I am a chartered accountant from over in the UK. Perhaps you can tell from my accent. I've been in this profession now for, over 30 years now. I entered the profession in '88. I joined a large multi-partner firm of accountants in the UK. I qualified as a chartered accountant 3 years later, 1991. In 1996, I decided I would start my own sole practitioner accounting firm. I had no clients. I just set out, had a spare room in my house, spare bedroom, bought a table, bought a computer, and set out to build a practice. Surprisingly, for the first few years, it grew crazy fast. I went from 0 to over 200 clients in the first 2.5 years. It grew fast. I moved into my first premises after a few months. I moved into my second premises after 15 months. I hired people, but it was not a great success. The reality was, by the end of 1998, 2.5 years in, my life was a mess. I found I was working crazy long hours and struggling just to make ends meet. I made so many mistakes in those first few years. And then for me, everything changed at the end of '98. I met one of my mentors, one of my best friends now, Steve Pipe. I went on his 3-day accountants masterclass in November 1998. And that changed my mindset. It changed the way I thought about running an accounting firm. And a year later, in 1999, I met another of my heroes, Ron Baker. And it was Ron Baker that explained this concept of value pricing to me. This was towards the end of '99. I was 3.5 years into my firm, making a huge mess of it. And as soon as I understood value pricing, this light bulb went on in my mind. Suddenly it made so much sense. And over the next few years, my practice changed out of all recognition. I was getting much, much higher prices. I was winning better quality clients. I was losing the clients I hated. And my profits turned around so fast that a few years later, I was able to sell my accounting firm in what's called a management buyout. My client managers, Steve and Jonathan, bought the practice from me. It still exists this very day. I believe it's still called Wickersham's in Sheffield in the UK. Meanwhile, I'd been asked by my friend Steve Pipe to share with me, with other accountants in the UK, what it was that I'd been doing. So I've been actually teaching the profession now since the year 2000, over 20 years of teaching the profession how to build more successful firms, and in particular, how to master value pricing. I've written a number of books on the subject. My first book, Effective Pricing for Accountants, was published in May 2011. It went to number 1 on Amazon in the UK across all business books. I've written, I think, 4 books since, one of which is How to Build a More Successful Bookkeeping Business. And what I do now is I run the Value Pricing Academy. I teach the profession. I teach accountants and bookkeepers around the world, mainly in the UK, the US, and Canada, how to build more successful firms, how to price better, get higher prices, win better quality clients, and have more fun. So that's a bit about me. So what are we going to cover in this session today? Well, I'm going to start off by sharing in a few minutes what is the biggest myth that's really holding us back in our profession. I'm then going to look at some of the big mistakes that we make. Big mistakes that I made in my accounting firm in the late 1990s, mistakes that I know that many other people are still making. So we'll look at those and how to avoid them. And then I'm going to share with you 3 steps to moving towards value pricing, 3 of the foundations of value pricing. And then we'll wrap up with talking a little bit about how to calculate a price with confidence. Because that's a big challenge that many bookkeepers have, particularly if you're in this hourly pricing. How do we move towards value pricing? How do we give a fixed price up front, knowing that that price is going to give us a profit? So we have a lot of stuff to cover, and we only have 40 minutes. And I've got so much I want to share with you. So Normally with longer webinars, I would have time for questions. I am sure you will have questions. Unfortunately, we probably won't be able to get questions done in the session today just because of the time that we have. I'd rather focus on giving you lots of content. If you then have questions for me, then please feel free to reach out to me afterwards. You can connect with me on LinkedIn. If you search on LinkedIn for Mark Wickersham, you will find me fairly easily. Connect with me on LinkedIn. Let me know that you saw me at the Successful Bookkeeper Summit. Let me know you saw me at the conference, and I will happily accept your connection request. And by the way, when I get people connecting on LinkedIn, I always send a message, a thank you message with some links to some free resources. So feel free to connect on LinkedIn. When you do that, then if you've got any questions, please just ask me those questions. Or if you prefer Facebook, you can go to my Facebook group, which is Value Pricing with Mark Wickersham. Again, search on my name, you should be able to find it. And if you join my group, there's a couple of questions you need to answer first. Just say you saw me on the Successful Bookkeeper Summit, and I'll let you into the group. It's a group of nearly 9,000 accountants and bookkeepers focused on value pricing. So please feel free to go there, and you can also ask me your questions in one of the comments. And feel free to tag me as well. Let me know you saw me at the summit, and I will answer your questions. Okay, so that's how we'll deal with questions today. And please do ask. I am here to help you as best I can. But let's kind of dive into the content, because as I say, we have a lot of content to cover and not a lot of time together. So the first thing I want to talk about is, what is the biggest myth? What's the biggest myth that holds us back? Because I know that pricing is a challenge. I know that you are working crazy hard just to try and make those ends meet, just to get by. And one of the big myths is that we need to put our prices up. Pricing is at the heart of most of our problems. I know this from when I was running my accounting firm in the 1990s, is that when we price too cheap, then we find that it affects our margins. And so we think that the best way to solve that is, let's win some more clients. So we win loads more clients because we're pricing cheap. And the problem with that is we then find ourselves crazy busy. And so when we get crazy busy, what we then do is we think, okay, I can solve that. I can hire somebody to do the work. So we hire somebody to do the work. And even if we get somebody good, and I made lots of hiring mistakes, but when we get somebody, then we've got to train them. We've got to review their work. We find that we get busier still, and we've got a brand new fixed cost in our business. Our costs have gone up because we're now hiring people. And so what we soon find is that because we're pricing too low, and now we've got increased fixed costs, we're now working hard because we're training other people, managing people, and that extra fixed cost means that because we're pricing too low, our profits haven't changed. We're still working just as hard. So, but never mind, we're employing someone now. So now we can go out and win some more clients. Now we can win some more clients and we'll be more successful, more profitable. And then we do that and find that we're just busier than ever before. So we hire somebody else. And this goes on and on and on. If you're pricing too low, winning more clients is never going to solve the problem. It just makes you busier and busier and busier. If you're pricing low, winning new clients just compounds the problem. We have to fix the pricing first. When we have the pricing fixed, we're getting the right price, then we can win new clients. So we have to increase our prices. The trouble is, what I find is people say to me, Mark, I can't put my prices up because my clients are price sensitive. And when I run physical conferences and on the stage doing keynotes, I often ask the audience, give me a show of hands if you have price sensitive clients. And what I find is all these hands go up. And this is a big myth. You see, you don't have price sensitive clients. And I know right now you're probably thinking, Mark, you are completely mad. I do. You don't know my practice. I have price sensitive clients. No, you don't. You do not have price sensitive clients. Let me try to explain why. Firstly, we have to understand, what does price sensitivity mean? And what it means is that somebody who is price sensitive always wants the cheapest of anything. They shop based on price. And yes, there are price sensitive people in society. And estimates carried out by both price psychologists, by behavioral economists, estimates put it between 20 and 30% of society. So yes, they exist. However, they are not your clients. You see, most people in society are not price sensitive. Most people are what's called value sensitive. And what that essentially means is that when we buy something, we are looking for value. And value is made up of the benefit that we get. What do we think we get when we buy something? And what do we have to give up to acquire it? Which is typically the price. And if the benefits we get are greater than the price, then we buy. And a value-sensitive person looks at the size of that gap. They want to see that they're getting value, and the price is only one part of the component. Now, for a price-sensitive person, they focus on price and just want the cheapest. But most of us are value-sensitive. Let me explain. If you think about your clients right now, how many of your clients own a product by a little company called Apple? Whether it's an iPhone, whether it's an iPad computer, whether it's a tablet, whether it's an iMac computer, how many of your clients own an Apple product? For every one of your clients that own an Apple product, by definition, they cannot be price sensitive because there are cheaper phones in the marketplace, cheaper tablets, cheaper computers. If your clients were price sensitive, they would not buy Apple. Apple do not have price sensitive clients. Think about your clients and their coffee buying habits. If you've got clients that before they go into the office, they go into one of these coffee chains like Starbucks or Peet's or Costa Coffee. Again, anybody that buys coffee from Starbucks by definition cannot be price sensitive because there are cheaper ways of getting your coffee fix. The reality is most people are value sensitive. Your clients are value sensitive. And the reason your clients are value sensitive is because whilst there are price sensitive people in society, your clients are not representative of the whole population. Your clients are made up of business owners, entrepreneurs, high net worth individuals. And those people cannot be successful in running a business or being a high net worth individual if they are price sensitive. And there's some psychology and reasons behind that. Your clients are value sensitive. The trouble is, the reason we think they're price sensitive is because at some point in the past, you've probably presented a price to somebody and you've had that reaction that we hate. Wow, that's a bit expensive. And when we hear someone say that's expensive, we assume that means they're price sensitive. And when we hear that reaction several times, we start then extrapolate in our minds and assume that everybody's price sensitive. The trouble is, that's not true. The reason why people say that's expensive, the reason why a value sensitive person, your client, says that's expensive is simply this. They don't understand the value. They don't understand the value of bookkeeping. If they don't understand the value of bookkeeping, that means they'll see it as expensive. Doesn't mean they're price sensitive. It means they don't see the value. And a value sensitive person is looking at that gap. They want to understand what the benefits are over and above the price. Is there a profit on the deal? Is it worth paying that price? And when we understand that, suddenly everything changes. Because when we understand people are value sensitive, we stop focusing on price and focusing on value. How can we make that value as big as possible? So that's the big myth. The big myth is we think our clients are price sensitive, and so we keep our prices low, and then we find we're just working crazy hard, crazy long hours. So let's look at some of the three big mistakes that we make. And we've kind of touched on one of them, but it bears repeating. The first mistake is this. As a profession, you are way too cheap. We're charging too low prices. And that's why life is quite tough right now. We're working crazy hard. And we do that because A, we don't know how to price, B, we have a lack of confidence, C, we think our clients are all price sensitive. We've dealt with that one already. So the first thing I recommend is that, and if you take nothing else away from today's session, is you need to put your prices up. You are too cheap, you need to put your prices up. Second big mistake that we make, particularly in the accounting profession with bookkeepers, is pricing by the hour. If you are pricing based on the hour, if you have an hourly rate for bookkeeping, please stop. It's a crazy mistake to make. And there's a whole raft of reasons why. Let me give you one that's really important. Way back now in 2005, November 2005, in the UK, a study was done by a well-known software company Sage. You've probably heard of Sage. And they surveyed thousands and thousands of business owners in the UK. And one question was really interesting. They said, what is the thing that you hate the most about your accountant? And the most overwhelmingly popular answer, the number one answer was this: surprise bills. Which to me makes perfect sense to me, because I hate surprises. When I'm a customer, I want to know right up front, what is the price? We hate surprises. And yet hourly rates give people a surprise. Nobody knows what the price is until we finish the work. And our clients hate that. The research shows that. And so if clients hate hourly pricing, hourly billing, then if for no other reason, we should stop doing it. Stop doing it because our clients hate it. We must give them a price. We must give them certainty right up front. And we'll look at how we might do that later on. So stop pricing based on the hour. There are many, many other reasons why we should stop doing that. The number of hours you spend is irrelevant. Nobody comes to you to buy time from you. No client is interested in your time. They don't care about what you do. Clients care about the outcome, the result, the solution. They care about your knowledge. They care about what they're going to get at the end of it. They care about value. They don't care about hours. So why do we price based on hours? I think the reason we price based on hours is because it's the way we've done it in the past in the profession. We've never really thought about it. It's a lazy way of pricing because it's easy. We just add up hours, stick them on a timesheet, multiply them by some arbitrary rate we've made up, and magically there's the price. It's a lazy way of pricing. We need to switch to value pricing. So that's the second big mistake. Number one, we're too cheap. Number two, we price based on the hour. Number three is the pricing and proposal process. Let me explain. Back in the 1990s when I ran my accounting firm, I was lazy with pricing. I had an hourly rate that was a made-up number. And when I met with potential clients, and the first 2 and a bit years, I won 200 clients. So I had about and I was converting 50%. I had about 400 meetings in 2 and a bit years with potential clients. And many of them went really, really well. I'd meet with a potential client. I'd have a great meeting. I came from a tax background, by the way, so I used to talk about tax planning and looking for tax planning opportunities. And very often, the potential client would say to me, wow, this is amazing. I've never heard this stuff before. You are exactly the accountant I'm looking for. But tell me, what will it cost? At that point, I'd panic. I had no idea. I've never worked with you before. How can I give you a price? So what I would do is I would then say, that's a great question. Let me go away and think about it. And I will write a proposal and send it through the mail. We had the mail back then. You probably email it to people these days. And that's a huge mistake, because if we think about it, think about whenever you have received a quote or a proposal by email or through the mail. When you get a proposal, when you get a quote, what's the first thing you look for? And I know what it is. The first thing we all look for is we go looking through for the price. And your client is just the same. It doesn't matter how fancy your proposal is. They will go through it looking for the price, and they will make an instant judgment about that number. Usually, wow, that's more than I'm expecting. And very often we don't hear back from them. We must have the pricing conversation face to face with them in the meeting or on a Zoom call. We must discuss price. We need a process for discussing price, and we'll come on to that very soon. So let's look now at a three-step process, 3 real foundations of value pricing that we need to get nailed, really, if we want to get better prices. So the first thing is very simple. We have to add more value to our clients. And there's a number of reasons for this. Firstly, because as professionals, I believe the number one focus in our firm should always be the client. Our focus should be how can we give the best possible result to our client? How can we add as much value? How can we help them solve their problems, help them to get what they want from their business? Because I think it's the right thing to do as professionals. Secondly, because when you add extraordinary value, you differentiate yourself from everybody else, the cheap bookkeepers out there. And number 3, when you create more value, then as long as we're value pricing and pricing based on that value, when you create more value, then we can price higher as well. And that's what's nice about value pricing, because we're on the same side of the table as the client. The problem with hourly billing is we're not on the same side of the table. We have different objectives. In other words, if you want to make more money, it's really, really simple with hourly. Just work slower. Just take longer. Because if you take longer, more time goes on the timesheet, the bill's going to be bigger. But that's not in the client's best interest. But with value pricing, our focus switches now to how can we create as much value for the client as possible? Because when we create more value, we can get a bigger price. It's a win-win. The client gets a better result, we get a better price. It's a fairer way of pricing. So we need to create more value first. So if we think about bookkeeping for a minute, how could we do that with bookkeeping? And what we need to do is brainstorm and think about how can we help the client get a better result. Now, sometimes people say to me, Mark, I have no idea. Well, ask your clients. Ask them what's their goals in life? What are they looking for from their business? What do they want help with? If they could wave a magic wand and you could help with anything, what would that be? Ask your clients what more they could possibly want from their bookkeeper. So get feedback, talk to them. Here's some possibilities for you. It may be that as part of adding value, it may be that you create once a month, let's say, some summary management reports, some useful reports that analyze their data, analyze their profit and loss account. Another thing that we could do is we could do some accounts receivable monitoring. So it may be that what we do is we report back to them on a monthly or weekly basis. What are their accounts receivable? What are their aged accounts receivable? Is it going up? Is it going down? What's their accounts receivable days? Are they keeping their accounts receivable under control, or are they finding that it's getting out of control, which is going to impact, of course, on cash flow? It's critically important in a business. So we can advise based on that because we have access to the data, we have access to the numbers. We could also add value by having regular business review meetings where we perhaps talk about the reports. We help them understand the numbers. We might give them some business advice. We might give them some thoughts on how they could build a more successful business. So we could start to get into the realms of business advisory. Perhaps, of course, advisory might not be your thing. Another way that you can add value and help your clients is in this world of cloud technology. You've probably got your clients right now on a system like QBO. And as you know, there are so many apps out there. In fact, Intuit told me recently there's over 1,600 apps that integrate with QBO. Some of those apps are extraordinary that can help clients with their financial systems, whether it's managing inventory, work in progress, whether it's managing accounts receivable, whether it's managing payroll expenses, the Expensify, for example, QuickBooks Time for managing clocking in, clocking on. There are so many applications that will help a business run a more streamlined, efficient, profitable business. But they perhaps have no idea that those apps are out there. And yet there's real value in recommending them to clients. There's real value in saying to the client, we've looked at these apps that we think might suit your business, but we've also reviewed them all and we think these ones aren't very good, but these ones are excellent and are just right for your business. We can add value by doing an app review. We can add value by once a year talking to the client and doing an annual review of their goals, ask them what they're looking to achieve in their business and help them to get where they want to get to, because you're a business owner. You've got skills in running a business. You could probably bring your insights and help them. So many things that we can do to add value to our clients. That's the first thing that we have to do. The first thing is step one is let's create more value. What more value can we create for our clients? And if you don't know the answer to that, ask them, talk to them, get some feedback, find out what else that they would want from their bookkeeper. Number two, and this one is really powerful. Probably the number one foundation of value pricing is this. As my friend Ron Baker tells me, value is in the hearts and the minds of the customer. Only they can determine value. And the trouble is every customer values things differently. So that means that we should never give people a single price. We have to recognize that everyone values things differently. And so we have to give people choice. Choice is so important with value pricing. We don't know what people value. We should not prejudge what people value. So what we do is we give them a choice. And when I started value pricing way back in 1999, the very first thing that I put in place in my accounting firm that made a huge difference was what I call menu pricing. Now, let me just show you what that means. So you'll have seen this before because it's so common these days. Think of it, if you like, as the bronze, silver, gold. I call it menu pricing. Technically, it's called versioning if you read the textbooks on pricing. Versioning, we create different versions of our product or service. So if we're talking about bookkeeping, we have different versions of our bookkeeping package. We have a bronze, a silver, a gold, for example. And this is so powerful. It's the first thing I did in my accounting firm in 1999. Let me just tell you a little quick story. So these sheets of paper are real sheets of paper from back in 1999. I know you perhaps can't read them in detail right now, but I came from a tax background, so I did a lot of tax planning. And one of the things that I did a lot of was incorporations. In other words, taking a business that was a sole practitioner or partnership and moving them to a corporate structure where there may have been some benefits of doing exactly that. And one of the things they would always say when I explained the benefits of moving to a corporate structure was, what will it cost? And I used to say, between £200 and £250, about $300, $400, which in hindsight is crazy cheap, and I knew it was cheap. But surprisingly, many people said to me, Mark, that's a bit expensive. And I didn't know why. Because I knew that was a cheap price. And then in 1999, I discovered something. I discovered value pricing. And I discovered this thing called menu pricing. And I created 3 sheets of paper. And what I created was, if I go back to here, I called it a 3, 4, and 5-star. Bronze, silver, gold. I had 3-star incorporation, 4-star incorporation, and 5-star incorporation. And I created 3 sheets of paper, one for each, that set out what I would do for them with each one. And although you probably can't see the numbers right now, even though I was only charging between $200 and $250 before, I decided that I was too cheap. So what I did is I made the cheap one, the 3-star service, I made it £350, more than what I was charging before. I made the middle option $750 and the top one $1,250. And something really interesting happened over the next couple of years. First, what I found is nobody ever said again, that's a bit expensive, which was interesting because it was a lot more expensive. Secondly, what I found is that most people, about 60%, chose the middle option at $750. What I also found is that more people, about twice as many people, chose the most expensive as opposed to the cheapest. So I sold mostly the middle one and secondly the most expensive. When I did the numbers, after a couple of years I was curious and I measured this, and what I found is that 2 years later, my average price for that service had gone up by over 3 times. And interesting, the middle option was exactly what I was doing before for a tiny fraction of the price, for $200 to $250. And now people were willingly paying $750. I had no idea why at the time, but I then got fascinated by pricing. What was going on here? And there's some interesting things that go on when we start to recognize the power of 3, the magic of 3, menu pricing. And this is why we see it used all over the place. So I started doing this in my firm in 1999. I've been teaching menu pricing since the year 2000. We now see it in the world all over the place. The most profitable firms on the planet all do this. If we take the most profitable, Apple do it. If you go online right now to Apple to go and buy an iMac computer, they will give you a range of different packages. Why? Because it works, because they know that everybody values things differently. When you give them a choice, some people will choose to pay you more money, particularly when those more expensive options build in additional forms of value like we talked about in step 1. We see it in the profession, for example, Intuit QuickBooks. They have different packages. And a little while ago, I got an email came through from one of my students. I get very free, over the last few years, many people tell me about how this is working for them. One lady who you might actually know is Teresa Slack. You probably do know her. She sent me this email. She's a member of the Value Pricing Academy. And she said to me, so just had a wonderful win today. I quoted 3 packages to a client, Shopify integration to QBO program, 2 years of cleanup work, and a QuickBooks training program. So 3 services. She says, I received the following email today. I would like to commit to all 3 programs, please. I will take the middle option on all 3. So many of Mark's principles are at work here. Thanks. And So what she said is she had 3 different services she sold. All 3, they chose the middle package. And there's a reason behind that. It works. It's called the magic of 3. And perhaps when we have some more time together sometime, we will talk a bit more about that. Okay, we have about 10 minutes left, I think. So let me move on to step number 3. So just to recap, we add more value. We create more value for the client. Then we give them some choices. And of course, what we do is those things that when we create more value, we put them into our more expensive packages. So we give the client a choice. Those clients that see more value in those extra things will choose to buy our premium package. They will choose to pay more money. Those that don't see value, they can still buy a cheaper option. For us, it's a win either way. Whereas if you only sell if you sell bookkeeping and it's $75 an hour, then the client has a choice. It's a binary decision. Yes, I'll buy. No, I won't. Once we move to menu pricing, subtly the conversation changes to, yes, I'm going to buy. Which one's the right one for me? Okay, number 3, what we then have to do, the third foundation of value pricing, is having created more value, having given them different choices, we then have to figure out how do we communicate the value. And this is so important because clients don't understand bookkeeping. They don't understand the value of it. And so if you have somebody say to you, that's a bit expensive, ultimately it's our fault because we're focusing on the wrong thing. We haven't figured out how to communicate the value properly. And so we have to figure out what's the right language, what's the right words that we can use. And so one of the things that I recommend that people do, and what I do in the Value Pricing Academy, is I recommend people have a professionally designed brochure that they use to run through with their clients. And the reason for this is because this becomes your system. It becomes your script, your age memoir, your agenda for the meeting to build up the value. We have to say certain things. So for example, one of the things we know is that people are more motivated by avoiding pain than it is by gaining something. So we need to talk about pain. When we are talking about what we do as bookkeepers, then we have to make sure we communicate properly. What is the pain of trying to do it yourself? And we have to describe that pain, build up that pain. We have to use techniques like quantification, put some numbers on it. So for example, if the client's doing it themselves right now, how many hours are they spending a week doing their own bookkeeping? What's the value of their time? What's their time worth? Ask them. And then we can put a value on their time for trying to do it themselves. What if they're making mistakes? Can we quantify that? What's the potential penalties if they get a visit from the tax authorities because they're making mistakes, because they're late? We want to make sure we talk about all the things that can go wrong. We want to talk about the pain and wherever possible, put numbers to it because that makes it more real. So that's one of the strategies that we want to use. We also want to use anchoring. We want to use numbers because people don't know the price of anything. We are clueless about price. And so we want to create anchors. For example, we could tell the client, as part of building up the value of what we do, what it would cost if they hired a full-time bookkeeper. And that's a number you can get very easily. Do a Google search. Now, that maybe they don't need to hire a bookkeeper. They want somebody who just do it for half a day a week. But it doesn't matter. When you give them a number like that, it creates in their mind something called an anchor, which is the most powerful principle in price psychology. So we have to figure out how to communicate better. Okay, so has this been valuable so far? What we're going to do next, I'm going to look at very quickly a process for how you might come up with the price. How do you come up with the price for bookkeeping work? Before I do that, I do have a couple of special things for you as a thank you for coming along today, a couple of resources for you. And of course, if you connect on LinkedIn, I'll send you some links. I'll send you these links and some others. So one of the things that you might want to do is I regularly run live sessions, webinars, typically 2 or 3 every single month. And what I do is I send out an email on Monday morning to my VIP list, telling them what sessions I have got coming up live in the week ahead. If you'd like to come along and be invited to some of my sessions I do every month teaching value pricing, then all you need to go to the link www.wickersham.co.uk/free-mentoring. I've put it at the bottom of the slide, and if you join that list, then once a week you'll get an email where I'll tell you when my next live session is, so you can come along completely free. Also, I carried out a little while ago a benchmarking study sponsored by Intuit on how much people price for bookkeeping services. And if you'd like a copy of that, again, I've put the link below. It's wickersham.co.uk/bookkeeping-benchmarking-report-free. Links on the screen at the bottom. So if you'd like that benchmarking report, by all means, go to that page and you can grab that. If you connect on LinkedIn, I will send you those 2 links anyway, so you can get those 2 resources. Plus, I'll give you a link to a couple of other things as well. So let's wrap up for the last few minutes with how to come up with a fixed price. And one of the things that I talk about is the pricing journey. And what that means is that if you're on hourly right now, sometimes moving to value pricing can be challenging. So I recommend doing it one thing at a time. Get to a place where you can give a fixed price with confidence first. And that means we have to understand what's the scope questions. What are the things we have to ask? What do we need to know before we can give a fixed price for bookkeeping work? Then we can start to move and add in menu pricing and give a price for not just our bronze, but also our silver and gold. And then once we've done that, it's quite easy to start adding things on for value pricing. Let me just share this story with you. This is a lady who you may know. Her name's Kim Lafayette in Canada. She sent me this message. In fact, I interviewed her just a few months ago. And she said to me in the interview, and by the way, this interview will appear on my YouTube channel soon. She talked to me about her journey to value pricing. And she said, I would have quoted this person, the first time she did value pricing, she said, I would have quoted this person $4,200 a year for the services I provide them. But they chose my premium package and their annual price was over $18,000. So that was huge. She went on to say, the second time I used value pricing, my increase was almost 200%. And then the third time, the increased price that I was quoted was over $22,000. And that was not even the biggest part of that quote. The biggest part was that it was an increase of over $30,000 of what their previous bookkeeper was charging them, which demonstrates, of course, that people aren't always looking for the cheapest. They're looking for the best. So how did Kim do that? Let me show you very, very quickly. She used a piece of software called Effective Pricing. And what this allows you to do is sit down with the client, open up your laptop or your iPad, and you can ask a series of questions. You can ask some scope questions like, how many transactions per month do you have? What type of business are you? You might ask questions like, how many bank accounts do you have? How many credit card accounts do you have? So ask what's called some scope questions to understand the scope of the work. And behind the scenes, our software is calculating a price. We can also ask preference questions. We can give them choices. We might want to ask if they'd like us to do bill pay for them. And I think in Canada, you can use things like Pluto for that. In the US, they use billpay.com. So you could run a service doing bill pay, and you can ask the client if they want that service. We might also give them a choice around how frequently would you like the bookkeeping? And they might say, do you know what? I've always had it done monthly before, but weekly sounds really good. We might ask them if they wanted to scan the records. We might ask if they want a review meeting with them. They might say, yeah, that would be amazing. Let's have a monthly review meeting. And then when we've given them some choices, what we then do is we can present our bronze, silver, gold packages, which we've talked about already today, and we can then reveal the price. Now, let's say they tell you in advance they want the premium, and it's come out at 12 payments of $1,094. The interesting thing about this process is they either say yes or no. It's really simple. If they say yes, that's great, you've made a sale. If they say no, that's too expensive, then what we do is we work with them. And this is why we have a pricing conversation with the client, because we can go back and change things. It might be we say it's $1,094 a month because you want weekly bookkeeping. If we made it monthly and if we just had a quarterly meeting, that brings the price down to just $852. And at this point, that first price of over $1,000 creates an anchor in their mind. Now that feels cheaper at 852, it's a better price, they're more likely to say yes. But if it's still too high, we can just go back and change other things. Perhaps it might be that they don't need bill pay, and we take that out of the virtual shopping basket. And now the price is just 734. And so this is a process where we work with the client. This is how Kim got those extraordinary results, because she was working with the client until they said yes. And the key thing here is when we price working face-to-face with the client is we always want to give them a high price to start with. We give them a high price, which creates an anchor. And even if they say no to that, it's too expensive, we can then work down until they say yes. Unfortunately, what we tend to do is, because we hate that reaction and we want people to buy straight away, is we go in at a price that we think they'll say yes to, which is usually way too low, because very often they would pay more if they understood they got more. Okay, we've covered a lot of stuff today. I know you may well have some questions for me, so I told you can connect on LinkedIn, join my Facebook group. I hope you've had a great session this time, and enjoy the rest of the Successful Bookkeeper Summit 2021. I know you're going to have an amazing time and hearing about the whole theme of Together We Rise. And certainly when you price better, you will rise, because when you price better, it will help you to create more value. It'll give you more energy, more passion, because you will find that you are working with better quality clients, clients that appreciate and value what you do. So have fun on your value pricing journey, and hopefully I will catch up with you again on another session sometime soon. Goodbye for now.